Hello, everybody. Welcome to this Bursa webinar that is managed by LifeChamp. So today, our topic for this Bursa webinar that's titled Using Elliott Wave, Identifying Price Movement Patterns in Trading. So hope you all are geared up for this Elliott Wave session. So in this session, we are going to talk about what are impulsive waves, what are corrective waves, what are the 1, 2, 3, 4, 5 ABC, and how do we combine Elliott Wave and Fibonacci indicators to find trading signals. Okay, so for those of you who are new to Elliott Wave today, you are in for this session where you're going to learn a lot more about Elliott Wave. All right, so as usual, before we begin, disclaimer, whatever you share on this webinar is only for educational purpose. So in no way that we give any recommendation to buy or sell any companies. If you decide to make any investment decision after today's webinar, you do it at your own risk. So allow me to introduce our speaker today. And she is none other than Pauline. So Pauline is a licensed and experienced financial planner who is certified by a Malaysian Securities Commission Financial Planner Representative License, CMSRL, and Bank Negara Financial Advisor Representative License, FAR. So Pauline is also a course trainer and public speaker at FPAM and also Bursa Malaysia. So over 25 years in education, she has accumulated over 50,000 students and conducted over 200 large-scale corporate courses. Other than being a professional financial planner and educator, Pauline is also a best-selling author who has published 6 books on investment and financial planning. So her articles have appeared in financial magazines such as Personal Money, Money Compass, and many more. Many people also don't know, actually Pauline is CFTE, Certified Financial Technician. Okay, she is one of the first few women practitioner in who got the license in technical analysis. Not license, certificate in technical. How do I put it? Is it certificate?
Yeah, it's a certificate. Yeah.
Yeah,
professional certificate. Yes.
Yeah, certified financial technician. That means she is very well versed with all the chart patterns. Okay, so today we are very honored to have Pauline who conduct this session for us so that we can learn more about Elliott Wave and its application in the Malaysian stock market. So over to you, Pauline.
Hi. Okay. Thank you, Shane. So good evening, everyone. My name is Pauline Young, and I'm a licensed financial planner, and I'm also a certified chartist. So let me share my screen first. So actually today's topic, I'm very excited about it because this is one of my favorite topic. As you know, I have published several books, and it's always good that I receive a gift as a book, as a gift. So this book was actually a gift from Elliott Wave International because I joined one of the affiliate programs. So they gave me this book, and I actually read the whole book, and it was very, very good. So it is very, very applicable when you are doing trading as well. So Elliott Wave Theory is something that a lot of people, they find it very difficult to understand. And in fact, if you to look at Elliott Wave, it's talking about the patterns, the price patterns of the stock prices. And if you believe in the technical analysis, you have to believe in that price behave in a natural way. Okay, so under the natural law of the wave theory, so whereby we are looking at waves, actually the stock market waves actually repeat over and over again. So that is why people who are into the Elliott Wave theory, then they will probably use it as a tool for the rest of their trading life. Because once they master this Elliott Wave, then they find this very, very useful in their trading. And hopefully in today's, I will do this as a form of introduction to the Elliott Wave. We definitely at the end of the session, we will learn how to count the wave, because a lot of people, they said that counting the wave is the most difficult part. Okay, so let's start. And today's agenda, we're going to look at the basic history, the theory about Elliott Wave principles, and to understand the difference between impulsive waves and the corrective waves. And in fact, for last session, when we had that Fibonacci, so this Elliott Wave principles is actually the natural the continuation of the Fibonacci what you have learned last session, because in order to do Elliott Wave well, you definitely need the foundation of the Fibonacci analysis. So because some of the wave count, you need to know the principles of the Fibonacci as well. And then to learn the Elliott Wave Theory, it's 1, 2, 3, 4, 5, and then the impulsive wave is ABC. To understand the rules of this Elliott Wave Theory, and then last but not least, to do case studies. Okay, so we will do case studies whereby you can type the stock name, and then we'll go and look at those cases, and then we will count the waves together. Okay. All right. So the history for the Elliott Wave, it was actually developed by Ralph Nelson Elliott. He published this book in 1938. So this, and he was born, if you look at the date, he was born in 1871. So definitely he has been through the First World War, the Second World War, maybe, the Second World War, and also the Great Depression. So that was a time whereby we already had that stock market. And then what kind of a world is it when you are living in the 19th century, and then now compared to now we are in the 21st century. So we will, at that time, they already have the stock market, and they're already looking at the price, the stock pattern, the charts, and they are actually looking at the patterns tend to repeat itself. So even up to today, pretty much we can still apply this, and it's still, because after all, the chart is based on the psychology of the mass market, and it is the human market participants that created these chart patterns. And so what we need to do is to identify the patterns, and then we trade on them well. So, okay, so first, when we look at the Elliott Wave Theory, these are the basic steps. So definitely you need to count the waves. The waves are 1, 2, 3, 4, 5, and then ABC. So if let's say you are looking at the uptrend, okay, the uptrend will start with wave number 1, okay, 1, 2, 3, 4, 5, and then the corrective wave will be ABC. So what you are looking at is, okay, let's say you are looking at a normal chart whereby, I need to type in my, okay. So we are looking at this kind of a uptrend. Okay, so for all this, for uptrend, that you won't see a chart whereby it will go up continuous forever. There must be a retracement. So the retracement part, we have done it in Fibonacci, whereby we are looking at how many percent of this retracement, then before it will continue to move higher, and then you have another retracement, and then it will move higher. So now this Elliott wave, we are going to count the wave, so that we want to know the major application of this Elliott wave is that we want to know when is this wave is going to be ending. Okay, so the wave will be 1, 2, 3, 4, 5, 1, 2, 3. So then at least we know that when you reach wave number 5, then it will be followed by a series of correction, and the correction will be ABC. Okay, then it will continue again, resume the uptrend, and then it will count 1, 2, 3, 4, 5, and then ABC. So what we are looking at is that in this kind of a huge, major, big wave, there will be smaller wave as well. So in each of these smaller wave, you are looking at 1, 2, 3, 4, 5, ABC. And then you resume again, 1, 2, 3, 4, 5, ABC. Resume again, 1, 2, 3, 4, 5, ABC, and then you resume. So when you are doing that, that means you are actually counting the wave. And And there are a lot of rules involved in the Elliott Wave theory. So it makes these principles very complicated because there are so many rules. And then sometimes besides the original rules, and then they also have the extended version. The extended version meaning that you have the extended wave 1 or extended wave number 5. And then you have a truncated whereby sometimes after the 3rd wave and then after the 4th wave, and then when it looking for the 5th wave, the 5th wave is being terminated early, so truncated. So there are a lot of alteration, but nevertheless, the main idea is there. So what we are going to see is that basic things. The basic will be impulsive wave. The impulsive wave meaning that you will be going for the main trend. The main trend is a bullish trend, so it will be uptrend. Then you have a corrective trend. The corrective trend will be the opposite direction, whereby it is called the retracement or the pullback. Okay, so you are going impulsive wave and then followed by some pullback and then up, down, and then later on, then you have a major corrective, which is the ABC. Okay, so this ABC will be more on a major corrective trend. And sometimes this corrective trend could lead into the ending of a major bull market, and it could be the beginning of a bear trend. It could be, okay? If it didn't continue, then it could be going further down, and then you have to start to count this wave again. So instead of going uptrend, okay, when you are doing, if you thought that it's going to be a normal ABC correction and then continue the uptrend, but then in the end you see that it's going to go down further, then you have to start to count this as a the downtrend, the beginning of a downtrend. Then you have to count this as a wave 1. 1, 2, 3, 4, 5, ABC. Okay, so it will be like this: 1, 2, 3, 4, 5, and then A, B, C. The correction is here. So we are looking at wave 1 down, okay? Because this is an uptrend. Uptrend, the wave 1 is up. So when you are doing the downtrend, the wave 1 has to be down, okay? So this is wave 1, 2, 3, 4, and 5. And then you have the A, B, C. So you are looking at a downtrend here now. Instead of an uptrend, you're looking at downtrend. So it will be 1, 2, 3, 4, 5, A, B, C. Okay, the concept is the same. It's just whether you're looking at an uptrend or you are looking at a downtrend. Okay. Okay. So before we go into the real case, let me touch on some of the principles again. So while applying the Elliott Wave principle to any chart, we must keep in mind an important point. The Elliott Wave principle does not provide certainty about any one market outcome. Instead, it will give you the probability of a future direction of the market. In fact, the whole thing about investment is about probability. There's no certainty. Definitely it's about probability. So but definitely you need to put a stop loss. And if things didn't turn out, then you just have to stop loss and then you just leave that, exit the trade. Okay, so without any emotional attach. So it will be, everything is based on probability. Okay. So then let's take a look at the rules. These rules, you have to memorize. There's no short form to it. You just have to memorize. Because when we count the rules, when we count the wave, and if you break the rules, then you are not counting the right wave. Okay, so definitely we need to memorize these rules. So let's memorize together. So here, rule number 1 is that wave 2 should not break below the beginning of wave 1. So we are looking at 1, 2, 3, 4, 5. So this wave number 2 here, okay, so because of this retracement, right? Remember in Fibonacci, we said that retracement, the maximum is 618, which is around here, okay, slightly more than half, 618. So if let's say you have a retracement all the way down back to the original starting point, then it is not an uptrend anymore. So therefore, wave 2 should not break below the beginning of wave 1. So that is wave number 2, because this is principle number 1, whereby we are looking at about 60% of a retracement maximum, and then we move up again. Okay, if you have a full retracement, no, you can't do that. Okay, so that's not a wave 1. Then you have to recount again. Then principle number 2, wave 3 should not be the shortest wave among the 1, 3, 5. Remember, we have 3 waves, 3 up wave here, 1, 3, 5. Okay, so is this 1, 3, 5? So when you see 1, 3, 5, and this is wave number 1, number 3, and then wave number 5. So what it says here is that wave number 3 cannot be the shortest among these 1, 2, 3. Okay, can never be the shortest. And these are principles whereby it cannot be violated. Okay, so if you count the wave whereby your wave number 3 is very short, okay, shorter than the wave 1 and 5. So that means you know that you have counted the wrong wave. Okay, so given this kind of a principles in place, right? So then it makes this counting of the wave more objective, okay, because then you know that you have to follow the principle. Then you know that if I were to follow principle and other people also follow principle, most likely people who follow the principle, they are likely to count the right wave, okay, likely, but not absolute, because after all, this Elliott wave not so easy to master. So, but however, if you have seen many times over and over again in your trading, probably you can identify the same kind of pattern that any other Elliottician, they call it Elliottician, that can also identify. So then it will be rather obvious, okay? And it is not obvious when you are not familiar with the rules, okay? It is usually like that. So you have to be familiar with the rules. And then wave 4 should not overlap with wave 1, except for futures, okay? So wave 4, we are looking at, this is the wave 4, and this is a wave 1. So here is a situation whereby you draw a horizontal line, and then this retracement, remember we said that the retracement is 618, the maximum. So if let's say it retrace until here, and then it bounce, okay, over here. So that means overlap already. So for equities, not allowed, never allowed, except for commodities. Okay, commodities, you can still see that, because for commodities, it is more volatile. So there are some exception rules for commodities. Okay, so commodities you can accept, but for equities, definitely not. Okay, cannot be. So this is later when we apply the Elliott wave, we will look at this wave number 4. Okay, when we count the wave, okay, we want to know whether you are correct or not. I want you to pay close attention to this wave number 4, because very often new people who get into this Elliott wave, they usually count this wave number 4 wrongly. Okay, so that is why you have to pay close attention to wave number 4 later when you do that. What I see is that cryptocurrency, because for me, I don't look at too many cryptocurrencies chart. I only look at Bitcoin chart only. So for Bitcoin chart, I see that it is following the normal equity chart. So it is not like those others commodities whereby it was exceptionally volatile. But I saw that, in fact, the Bitcoin chart is pretty much following the Elliott wave. Okay, so it is a normal Elliott wave. But other tokens and cryptocurrency, I'm not sure, because I only look at one cryptocurrency chart. Okay. So then rule of alternation. So rule of alternation, this is another important, but then not in practice, I don't look at this rule so straight. Okay, I look at this rules very strictly, but not this rule of alternation too strictly, because sometimes you can see it, sometimes you don't see it, but it's fine. Okay, so so rule of alteration will be wave 2 and wave 4 should not unfold in two different waveforms. Okay, so that means that you are looking at this retracement. Okay, let me erase this thing. So we are looking at this retracement, wave 2, and then wave 4, this retracement, whereby when you have these two retracement, this the pattern cannot be the same. So that is the rule of alternation. So later we will look at the different types of the correction patterns. And then what the rule says that if you have flats here, okay, horizontal flats, you mustn't see a horizontal flats here. You must see a zigzag wave here. So that is the rule say. But to me, when I apply it, I don't see this as, you know, I see this not necessarily the like this, but sometimes I see that they could be the same. Okay, occasionally they could be the same. Not always they are different. Yeah, so this is something that is different from that rules. Sometimes when you apply the Elliott wave, right? Sometimes you see that, hey, how come the wave is like not 5 waves, but 6, 7 waves? Sometimes these are still acceptable because you have extended. So maybe the 5th wave is an extended wave, or maybe the wave 1 is an extended wave. So sometimes you do have this situation whereby it will not be exactly same as this 1, 2, 3, 4, 5, but sometimes you have 7 waves, you know, and that is because of the extended waves. Okay. Okay, then okay, so let's take a look at the Fibonacci. Okay, how do we combine Fibonacci and Elliott wave together? So here will be the relationship between these two. So for Fibonacci ratio relationship between the Elliott wave and the Fibonacci is that wave number 2 is 50%, 618, 764, or 854 of wave 1. Although these are some of the rules, but then when we draw the Elliott wave, we don't have to follow these retracements so closely, because what it says here is that 50%, 618, and these are very deep retracement. So meaning that when you're doing the wave 1 and 2, so for example, here, okay, so when you are doing 1 and then 2, okay, so when you do the 2, right, it says that the wave number 2 is 50% at least, or 618, or even lower. Okay, so this part here, I in my practice, I don't see always like this. Okay, sometimes the wave 2 can be quite brief, especially when you are looking at a very explosive kind of upward momentum. Then your wave 2, usually you don't see such a retracement. Okay, probably you see a brief retracement and then you go up again. Okay, so but after all, this is the some of the theory part. Okay, I just have to bring up to you. So wave 3 is 161.8, and then 200%, 261.8, 323.6 of the wave 1, 2. So what it means is that wave number 3 is definitely longer than wave number 1. Okay, but exactly, and they are looking at this kind of Fibonacci ratio, 618 and 2 times, and 2618, and this 323.6. So what it means is that when we measure the wave 1, wave 3, and wave 5, we measure the perpendicular height. Okay, so we are looking at the perpendicular height, whereby the swing low and the swing high over here. So swing high is here, and then the swing low is here. So we are measuring from the top of this swing high to the bottom of the swing low here. And this one is a perpendicular height, and you measure this height. And then compared to another height of this wave one will be the swing high and the swing low of this height, perpendicular, and then you measure what is that. So for example, this one is 1 ringgit, let's say. The height here is 1 ringgit. And then the possible height from this here, okay, this end of this wave 2 to this top part here, the swing low and the swing high, it is at least 1.618. Okay, so meaning that you use this figure, whatever the figure is. In this case, I make it very simple, 1 ringgit height. So this is 1 ringgit height, and then this will be 1 ringgit and 62 cents. Okay, so 1 ringgit and 62 cents, you add on to this part here. So let's say this one is a retracement of 618. Okay, so then this one become 1 ringgit minus 618 is 38 cents. Okay, so this one here is 38 cents. So 38 cents plus 1.62. So you are looking at 2 ringgit over here. Okay, so here will be the 2 ringgit level, 1 ringgit, 2 ringgit. And then if you were to measure the height, it will be 1.618 of this height. Okay, the first wave height. And then you look at the wave number 5. So wave number 5 will be the swing high and the swing low again. So swing high, measure right to the swing low here. So the swing low is this level, and you measure, and you will see that this height is similar to the wave 1. This is the theory. In the practice, you may not see this all the time. No, I'm just telling you the theory first. And then in the real cases, later we will see a lot of variation at the wave number 5 here. Sometimes you can even terminate it early. That means you don't have wave number 5. Sometimes wave number 5 is extended. Okay, even the height is even higher than this wave number 3. So there are a lot of variation here. But now I'm just showing you the theory part first. Okay, so you understand the theory part, know the rules first, and then later when you apply, then I'll tell you where sometimes you see, sometimes you don't see. Okay, and which theory and which rules you must follow, and which sometimes you don't have to follow, but then you will see roughly is there. Okay, so that is the part about Elliott Wave theory, whereby it makes people very difficult to follow, because some of the rules you have to follow, and then for certain, when you do the practice, real practical, then you know that certain rules sometimes you don't have to follow. So that makes it very difficult. So truncated, yeah. So Noah also say that. Okay, so yeah, we always see truncated wave number 5, and later I will show you. So that is why people for the last year, the growth stocks, okay, and it happened like that. That is why a lot of people, they caught in that position. Okay, never mind. So so we go back to the rules again and see if we have covered. Okay, so that will be the wave number 3. Then wave number 4, it's looking at the correction part, whereby we are looking at 14.6, 236, 382 of the wave 3, but no more than 50%. So what we are looking at in theory is that wave number 4, this correction is shallow, more shallow than the wave number 2. So just now we said that the wave number 2 have to be retraced all the way to 618 and beyond. But for wave number 4, it was a very brief. Okay, how brief? It says here 14.6, 23, and then it's like less than 1/3. Basically, not more than half of it. That is for wave 4. Okay, so here it is saying that this wave number 4 will be shorter, and then not more than 50%. Whereas wave number 2, you can have more than 50%. Okay, but as I said, in the real world, may not. Okay, this rule may not. But however, the basic concept is like this, meaning that you must see 5 waves, 1, 2, 3, 4, 5. And then when you're counting the 5 waves up, you must see that the wave number 4 cannot touch the wave number 1 here. The beginning of the wave, the swing high here. This swing low here cannot touch the swing high here. Okay, so if let's say you count halfway and then you see that, oh, my wave number 4 touches my wave number 1, then you have to recount again. This one you have to follow quite straightly. Okay. 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 Maybe I go into some of the chart first. Okay, just to make sure that you know how to count the wave, at least the first 5 waves first. Okay, we don't talk about the correction first. Okay, so we count the first 5 waves first. Okay. Okay, let me load my chart. So I'm using the trading view. I give you this link. Okay, we see the wave together and see whether you can count. Yeah, later one of the slide I have a glove stock, and then you see how the price, how the wave is. Fibonacci retracement. Do we need to use other than the indicator as assistant to apply Elliott wave? Yes, you can if you want. But because I just want to bring in the introduction. So because if let's say you bring in the indicator, right, I'm afraid that it will confuse you. So that's why I focus mainly on the pure waves only for today. Okay, so if you want to add, you just add one thing, which is the trend line. Okay, so you make this chart very simple. You just look at the Elliott wave together with the trend line, that's all. And can it apply to all stocks price or need to fulfill certain requirements such as volume, present stock? And basically, yeah, all these technical analysis have to be high volume stock. E-liquid stock, technical analysis not applicable, because when you are looking at e-liquid stock, the chart is very fake. In a sense, is that anybody can manipulate the chart if let's say the volume is not there. Okay, because after all, these waves, right, supposed to be mass psychology, meaning that everybody take action on it. So cannot be 1 or 2 people's action. Okay. Is there a limitation? Limitation of the Elliott wave? Yeah, a lot of limitation. There are a lot of principles, a lot of rules. So these are the limitations. So, but however, after you know the rules, right, and then when you practice it, and then you see that certain rules is there to stay, and then certain rules you can change a little. So it means that it's more like you just apply this Elliott wave on an obvious manner. Obvious meaning that at one glance you look at the chart, you see very clear. You see clearly that these are the waves. You can see the 5 waves. Okay, you can see very clearly. Then if you can see very clearly, I believe other people can see very clearly as well. So then those chart in terms of the winning trade, high probable trade, those are the easier high probable trade whereby it is very obvious. However, if let's say you see that it is not very obvious, okay, and then you know that when it is not obvious, other people may not see this obvious also, then it may not develop into a high probable trade. Because technical analysis will be something that everybody must see the same thing and everybody act on it, then it can be realized, or it's more like a self-fulfilling. Okay, so everybody saw it. For example, a clear one is a double top. Everybody see a double top, everybody act on it, and then it will definitely realize. However, if let's say you're talking about Elliott wave, because if the Elliott wave itself is not very obvious, then you know that the trade may not be a high probable trade. Is it true that the wave fall in Malaysia stock market are commonly in the form of a triangle? I see that the triangle is happening all the time. All the time, okay? In the Malaysia market. The most recent one is our KLCI index and also the Maybank. The same principles applies to all markets. Case in point, Hong Kong, very much driven by traders. Okay, for Hong Kong stocks, I don't really look at the charts, so I can't answer this question. But definitely principles can apply to all the charts, even commodities, even cryptocurrencies, as long as there is looking at the mass psychology. Okay, you just remember, technical analysis is built on the mass psychology. So as long as the market is very high liquid volume, everybody traded, then you can apply. Can we make example as a zigzag? Okay. The zigzag is a correction. Okay, later. So I let you count the first 5 waves first. Okay, so now this one, can anybody, okay, I don't know how I can let you count without me putting the numbers. Okay. So, okay, maybe I will say like this. Wave number 1. So this one is a great tag. Okay. So wave number 1. Okay, maybe I will say, okay. Is it here, wave number 1, or is it here, wave number 1? A or B? A or B is wave number 1. Okay. Now, and I look at it now. If you notice this wave here, you have if you were to count here lah, okay, 1, 2, 3, 4, 5, 6, 7. Okay, you actually count 7 waves here. So that is why when you count the wave number 1, right? You want to know that whether you have extended wave number 1 or you want to count extended wave number 5 here. Okay, so here usually I will look at wave number 1 is here. Okay, wave number 1. And then wave number 2. For wave number 2, wave number 2 is here, and then wave number 3. So for wave number 3, usually you want to see that wave number 3 is higher. So wave number 1, we put if I can draw, let me see if I can draw here. Brush, highlighter. Text. Okay, so text is here. Yeah, then they will take a long time. Okay, never mind. Okay, so this one is wave number 1. Okay, so if we put okay, wave, let's see the here. Okay, let me go back to the end there. Okay, so here will be the end of it. Okay, so you are looking at the end of it here, and then wave number 1 is here, and then 2, and then 3. Okay, so okay, 3. Is it here? Is it here or is it here? Because actually you can see that here you have one top here, and then here you also have one top here, and then here you have one top here, and then you have this correction, and then you have another top there. Okay. So somebody say the price. Good. You can use the price. So wave number 3 is 6.5. Okay, so you look at this is wave number 3. And then other people, okay, most of you say that it is 3. Yes, because when we count the wave number 3, we must be able to count the internal 1, 2, 3, 4, 5 as well. So so here we count 1, 2, but then the 3 is very short here, so maybe we'll say 1 and then 2, 3. Okay, we can extend 3, 4, 5. Okay, so sometimes we we count it loosely lah. So what I do is that I count it loosely. So what I want to say is that when you're looking at here, you see then extended wave number 1 here. Okay, so I count it loosely. So I say 1, 2, 3, 4, 5. Okay, a small retracement here, and then I lump it together. Because otherwise this wave number 3, it's actually too short, and then you can't. And then wave number 4 here, you can say that it's wave number 4, because if let's say you're looking at a loose here, which is, you know, it's not very obvious, but I would think that okay, why don't you use the yeah, it's a subwave. So why don't you use the Fibonacci? Okay, so because now we are looking at the wave counting. Okay, so we are looking at the impulsive wave first. So then we are looking at 1, 2, 3, 4, 5. Okay, so then this become a wave number 3. Okay, and then when you are looking at wave number 3, then you see that this is a wave number 4. So wave number 4, you are looking at okay, yeah, so it's there. So 1, 2, okay, 1, yeah, this one. Okay, wave number 2, retrace beyond the beginning. Yeah, so the beginning is here, so we are not. So 2 is here, so we are not. So 2, you are here, and then the beginning is here, so it is still valid over here. Okay. Okay, so let's say we are looking at this 1, 2, 3, 4, 5. Okay, so let's put a number here. So this is 3, and put another number here. This is 2, and put another number here. This is 4. Okay, yes, and we are looking at the 5th wave here. Okay, so which time frame would be the best? Okay, the time frame, I usually look at the daily chart. Okay, unless you're looking at 20, 30 years of a chart, then you need to look at the weekly chart. Or even if let's say you're looking for 100 years of a chart, then you look at the monthly chart. But usually for normal situation, I look at the daily chart. Okay, so that means that we are now looking at the wave number 5, possible. Okay, possible wave number 5. So although this particular stock is a favorite stock, okay, but however, we can look at it as a 5 here, and then we should look at ABC. And after the ABC, if the bullish trend continue, you should be looking at upward trend again. Okay, so that is considered when you're looking at a major bull trend, we should be looking at 1, 2, 3, 4, 5, and then correction ABC, and then we continue 1, 2, 3, 4, 5, and then correction ABC. But sometimes, okay, when do you think that this trend is over? The trend is over when you have a lower low than this wave number 4. So when you start to see a lower low than wave number 4, that means this trend is over. And then you should see a beginning of a downtrend. So for example, I can't draw from here, but let's say you see my cursor. You see my cursor, and then it says that I have A, B, C. Okay, so A, B, C. Let's say this C, right, is like a zigzag. Okay, so this correction wave, let's say, is a zigzag. Zigzag meaning that I'm looking at like going down. Okay, zigzag going down, and then this wave number C actually passed that wave number 4 here. So here, that means that you are forming a double top, or in this case will be a double top. Okay, so a double top whereby it closed below here. So the minute you see that it closed below here, lower than the 4, basically if you can short, I'm not sure whether this stock can short, but usually if in any stock, right, if let's say it's lower than here, then probably you need to short. Okay, you have to short because it will be in the downtrend. Okay, so any built-in indicator for us to indicate, okay, when counting, do you regularly compare your counting with the Fibonacci to confirm the wave number? Is it wave 4 should be smaller than wave 2? No, not necessarily. Wave 4 not necessarily smaller than the wave 2. No, not necessarily. And then Busa can't short. Okay. So then we'll see what is the development over here. Okay, I show you another one. Okay. So this one is front can. Okay, so okay, let's say we start from somewhere. Okay. We start from, okay, I need to refresh here. Okay, I have to zoom out because when you do the wave counting, you need to zoom out so that you want to see the macro view first. Okay, you want to see the macro view first. And of course, within the smaller time frame, you can do that as well. But generally, I prefer to look at Elliott Wave on a bigger time scale whereby I'm looking at the major trend. Okay, once you identify the major trend, then you decide which one you want to trade. Okay, let me ask you. You are looking at the wave 1, 2, 3, 4, 5, right? So let's say if you to look at wave 1, 2, 3, 4, 5, which wave would you like to trade? Okay, let's say if you are looking at this trend here, okay, let's say you are looking at this trend here, 1, 2, 3, 4, 5, and then A, B, C. Okay, so can you type in the chat here which wave you are more likely to trade? If let's say you want to trade, which wave? 1, 2, 3, 4, 5. Okay, I see that I have a lot of wave 3 and 2. There's no right or wrong because it's your personal preference. It's purely your personal preference and it has to be according to your personality. If your personality prefer the impulsive wave, then you just trade according to your preference. So there's no right or wrong. Okay, definitely no right or wrong. Any of these waves are good. They are good to trade. Okay, they are exceptionally. Each of the wave they have their unique, you know, very unique that you can trade, and then you can make money as well. So so Hakim says that 135, and then Paul Shan say that it's 2. I saw a number of 2 corrective wave here, and Len says that it's 3 and 5. Okay, 2, 3, 3 from 2 to 3. Okay, very good. So for me personally, I like to trade the wave number 3. That means I want to see from 2 to 3. Yeah, somebody say 2 to 3. Yeah, right. So I want to see that this wave number 1 here, I want to pass this wave number 1. Okay, so when it passes this wave number 1, then I know that I'm into that third wave, because the third wave, I can enjoy the profit. So that's why I prefer wave number 3. And wave number 5 is something that I try to avoid. But sometimes the wave number 5 can be extended. So it's hard to say as well. Okay, there's no right or wrong, definitely no right or wrong. But the safest bet is wave number 3. Okay, that is the safest bet. And which wave more volatile to scalp? For scalping, actually, the corrective wave maybe, because the corrective waves are the ones that are more random. So scalping, it is always good when it is random. So Jin stop, which wave now? Okay, 22. Which time frame is more suitable for applying Elliott Wave? So if let's say I'm looking at the daily chart, I look at the big picture first. Okay, so you can also apply to 15-minute chart, or you can apply to a smaller time frame if you are into the day trade. Okay, so it's your preference. You just have to look at the different stock. They have their own personality and characteristics. You just have to explore it. So each of those stocks, you look at the different time frame, and then you try to zoom in and zoom out. You understand the behavior from in and out. So you zoom in and zoom out, you look at the different time frame, and then you try to identify. So for me, I like the wave number 3, and I also like the corrective wave as well. Especially the corrective wave whereby I see the triangle. So that would be my favorite, because triangle you can see A, B, C, D, E. Okay, very, very obvious. So now I think I better touch on the correction part here. Okay, corrective wave. So corrective wave, looking at very, very distinct corrective wave. Okay, you can't go wrong. It's not like confusing. No confusion. Is very, very distinct. So meaning that this is the correction, right? So this correction, and in this case, this one is like going down. Okay, and sometimes the correction can be horizontal. Okay, so sometimes the correction can be horizontal and then go up and then horizontal. Okay, so within this horizontal, you are looking at this kind of a trend. Okay, so I don't want, so I just want to show that it is horizontal, but then the trend is like actually is zigzag inside. Okay, so what I want to say is that whenever you see a horizontal correction part here, horizontal, we call it the flats. Okay, because the meaning, which means that horizontal trend is flat. So you can relate. Okay, so no difficulty in this memorizing the term. Okay, so when you're in a horizontal trend, this one is flat. And then the zigzag meaning that it will be down. Okay, so let's say you are on an uptrend, and then when you have a zigzag, that means you are down. So meaning that when you're on an uptrend, and then you have A, B, C correction, and the wave C usually will test whether you can break the lower low. Okay, so then this one is called a zigzag. So you see it's different from the flats. So here we have, so basically these two are the major ones, but then we look at the 6 corrective patterns here. This one, do you have to memorize? I don't really memorize so much, but then I just recognize the pattern. Okay, you recognize a pattern. So zigzag is easy to recognize because it is looking at a big down, and then a short relief, a short rebound, and then followed by another big down. Okay, so this one is a zigzag. So definitely you can't go wrong with this zigzag because it is going down. Okay, and flats means you are moving on a sideway. Okay, so you can't go wrong with this. And irregular is something that irregular, meaning that you go like this, and then this B will be above this, and then C will be beyond the A. So it's irregular. And this is my favorite, and that's why some of you say that for the Bursa Malaysia stocks, right, we always run into a triangle. And I have to say yes. Okay, we always run into this triangle, and this triangle is A, B, C, D, E. And then once you see this E, right, then you buy in, and then that's it. Okay, all the way up. Okay, so this is my favorite as well. Okay, and this triangle, why is it a triangle? Okay, you see that you have this, and then you have this. So it is a triangle. Okay, then you have a double three. Yeah, somebody say it's a 535. Yeah, correct. So this one is a 535. Okay, zigzag is 535 because you have 5 wave down, meaning that you have quite a deep down, then a short relief, 3 waves up, and then followed by 5 waves down. Okay. Then over here it is 3 3 3. So meaning that 3 waves down, 3 waves up, 3 waves down. So you have a horizontal trend. So here will be more on irregular. Okay, 3 wave down, and then 1 2 3 up, and then 1 2 3 4 5. Then here will be 3 3 3 3. Okay, so 3 wave down here, 3 wave up, down, up, down. So it's all 3 3 3. So within this corrective patterns, right, you also can count the wave. And then you have the double 3, whereby you have 2 of these flats together, then you have a double 3. Sometimes you have a combination. You have a zigzag and then followed by a flat also can. Okay, zigzag followed by a flat. And then triple 3. Okay, triple 3 will be a combination of these two as well. Or you can have 2 zigzag, or you can have 2 flats, or you have a combination. Okay, so this double 3 or triple 3, these are all combination of these variations. But the main ones are the zigzag, the flats, and the horizontal triangle, which is the triangles. Okay, so these will be the 3 major corrective patterns that we are going to look at. Okay, irregular looks like the mirror of a horizontal triangle. Yeah, it does look like a triangle, but then you look at this, you have a higher high over here, and here you don't have a higher high. Okay, so that is the difference. And this is the rule of alternation. So when you see that the wave number 2 is here, and then wave number 4 is different. So let's say you see a zigzag here, and then this one you see 1 2 3 4 5 5 waves down. Okay, so also zigzag, but then this one is a 5 wave down, this one is a 3 wave down. Okay, so there is some alteration. So what it wants to show is that the stock market, sometimes when you keep on thinking that it will repeat and repeat and repeat, right? But in the real in the essence, right, we shouldn't assume too much. Okay, so this is what it wants to say. We shouldn't assume too much. For example, what happened in the past, it will happen here. Okay, we shouldn't assume like that. So maybe this rule of alternation is saying that, okay, so we should expect things to be different, because the stock market is not predictable in a sense. So sometimes you can have this pattern, and then sometimes you can have a different pattern, and then you don't expect to have the same pattern. Okay, so what this rule it want to show is that the stock market is random. So you can't assume that it always appear the same. Okay, and so but anyway, we should be looking at wave number 2 and wave number 4 that appear differently. Even slight difference is fine. Okay, so we just want to see like that. Okay, and is it possible wave 5 extended to become wave 3? How to identify it? Or corrective wave C become a A? So all these are possible. So when you say that whether wave 5 is possible to have extended, also possible. Okay, but then that is why when you see something is like that, right, that means it is not very clear. So if it's not very clear, then that means the outcome of that trade may not be so, so convincing, because then other people may not see it clearly. So the most obvious one that we want to see is that everybody, you see that is also very obvious. That you see obvious, other people also see very obvious. Okay, so that will be the obvious part of it. Okay, so let's talk about the trade setup. Okay, so here we are looking at the counting of the wave is like 1 2 3 4 5, and then ABC, and then 1 2 3 4 5, and then ABC. So these are called wave within the wave. Okay, wave within the wave. So 1 2 3 4 5, and then ABC. So once you count what ABC, and then you say that, oh, this one extended. So when it is extended, and then you know that this bullish trend is over. And especially when you can see that this wave number C is going to be over or surpassing the wave number 4. So the minute you see wave number C is surpassing the wave number 4, you know that this trend is going to be over. Then you know that you need to count a different wave, whereby this will be the beginning of a 5 wave for the downtrend. Okay, so remember this wave 4 and wave C, important. Okay, so you want to see that this C whether can bounce off from that wave 4 or not. If it cannot, that means that's it. That's the end of it. So where do you put your trade? Okay, so let's say you want to, usually for Bursa Malaysia, we long, we don't short. Okay, so let's say we want to long. So then you identify this corrective wave. After you see the corrective wave, then you go for the long. Okay, so it could be wave number 2 or it could be wave number 4. So if let's say you don't know whether it's wave number 2 or wave number 4, it's fine. At least you know that it is a correction. Okay, so if you know that it is a correction, you just need to draw a trend line, and then you know that there's a breakout. Okay, so with the breakout, maybe you want to wait until this top here. You want to see that it has actually passed this previous high, swing high, then only you can enter. Okay, so or if you want, you can wait until the impulse move and then wait for a retracement and see that this retracement is still very much supported by the trend. Okay, then there is this trend line here, and you want to see whether it will be supported by this here, and then another one will be this swing low here. But this swing low maybe is too far, then maybe you see this trend line. Or if let's say there is a 20-day moving average or whatever, you can see whether it is supported by that moving average line and whether it can bounce off from that moving average line. So once you see that you can bounce off supported, then you enter. You can also enter here. Okay, also safer. Okay, so there is no right or wrong. It depends on how you want to trade. It's entirely depending on how you want to trade and your rationale. Okay, how you want to do it. So let me answer some of the question. Is it true if, let's see, is it true if the wave 2 complex wave, then wave 4 will be simple wave? Okay, so for this alteration, the rule of alteration, I have seen sometimes they are the same. I have seen it before. So if you ask me whether it has to be a straight rule, I will say no, not necessarily, because sometimes it can be the same. And then how do we know if it's a wave 2 or going into wave 3? Going to wave A. Okay, how do you know if it's wave 2 or going into wave A? Okay, wave 2. Oh, I see. You mean this downtrend, is it? Okay, so the minute when you see the C wave here, it's beyond this wave 4. Okay, then you know that this is a downtrend. Then you can start to draw. Then this one become a 2. They can be interchanged. Okay, so then this C become a 2. It can be interchanged as well. Okay, so then Kobe also good looking. Okay, later we will look into the individual one. Okay, so let's take a look at the case study here, whereby I will show you this top glove. And if you can see this top glove, right, we are looking at 1 is here, 2, and then 3, and then 4. And then when people are looking at wave number 5, then too bad. Okay, then you see that there's a truncated here. So we call it the truncated 5th wave. So it does happen. Okay, so it does happen. And in this case, then after that, you are looking at A, B, C. And when this C is beyond that 4, you know that finish, this uptrend is over, and then you have to draw a downward wave here. So here we are looking at this whole wave here. So maybe I want to use a real diagram. Okay, so we use a real diagram for the top left, and then we see how we draw on the down wave. Okay. So here, okay. So let me minimize a little bit, okay, so that you can see. Okay. So we want to see a clear, big overall picture so that you can count correctly. So you need to identify a bigger trend first, okay? So in this case, just now we see that this one is the C. So then we are looking at this could be, sometimes when you look at this could be the wave number 2, and then this could be a wave 1, and then it may not be okay. So if let's say this is wave number 1, okay, and then you are looking for wave number 2, but then where is my wave number 3? Okay, so wave number 3, it could be, if let's say this is wave number 1, your wave number 3 has to be at least from a one eye glance like that, it has to be longer than this wave number 1. Okay, so that is why when you measure this as wave 1, then you have to see that my wave 3 has to be extended, and then I will have wave 4. Okay, so most likely, okay, maybe you can type in the chat, where is your wave 1, and then 2, and then 3. Okay, maybe you can tell me your wave 2. Where is your wave 2? Okay, maybe I see where is your chat here. Okay, you try to see first. Okay, take some time to look at this chart. Okay, your wave number 3. Do you wait until the 1.618? No. Actually, no need. You don't have to wait until that 1.618. So the wave number 3, let's say, okay, this wave number 3, right? So you from here, you can actually go in already. No need to look at that. Oh, you mean the target profit, is it? No, usually for my target profit, I don't really follow that 1.618, that profit target, no. I just follow the price trend. I just need to draw a trend line, and then I follow that trend. Okay, I don't count the Fibonacci like 1.618. I just follow this trend. If it's finished, then that's it, finished. Okay, so trend line is still very much important over here. Okay, back to here. So if you are looking at this, right, so you have to be careful about the wave number 3. So wave number 3, how are you going to look at this wave number 3? So actually, what I see is that wave number 3, it could be the top of the wave number 3. Do you think we are currently right at the wave number 3, or we are at the wave number 5? What do you think? What wave is this now? Are we at wave number 3, or we are at wave number 5? What do you think? Okay, it depends on how you look at this. So actually, when you look at here, right, you can actually find 5 waves here within this blank here. You can find a 5 waves here. So pretty much, we are looking at probably this could be the wave number 3. So it could be 1, 2, 3, and then 4. So we are looking at this 4 here. So if let's say it could be we have a truncated wave number 5 as well. Okay, so we could be having a truncated wave number 5. But what I'm looking at is that I'm looking at this as a 1. Okay, 1, 2, 3, 4, 5, because I count this 1, 2, 3, 4, 5. So this is wave number 1, and then A, B, C, and then 1, 2, 3, 4, 5, A, B, C. So we are doing an A, B, C here. So what I see is that here 1, 2, 3, 4, 5, and then we complete this A, B, C. So I put this as wave number 1, and then I start from here, 1, 2, 3, 4, 5, and then I put a wave number 3 here. Okay, 1, 2, 3, 4, 5. So that my wave number 4 did not touch my wave number 1. Okay, so wave number 4 did not touch my wave number 1 here. So then this one is a valid one. So then you can see that this will be wave 3 and then ABC. So ABC, what kind of ABC? Is it on a flat like this, flat 3 wave, or what kind? Okay, so we will yet to develop here. So it is usually I'm looking at mostly horizontal trend here. And then after some horizontal trend, then only maybe we'll see a truncated, or maybe we'll see there is no wave number 5, or maybe we will see a reversal, or maybe we will see a wave number 5 before we see a reversal. It's hard to say, okay? It's hard to say. But what I'm looking at is that these are the wave count for this top graph. Okay. Okay, what is the, okay, by the way, can you count for the Andrew? Okay, so many here. Become the 12 March time conclude. Okay, okay. So 121.2. Okay, I don't really know what is your question, but anyway, okay, let me see some of the question here. Okay, some say Andrew. Okay, so I see that this one is okay, so maybe I'll start from here. Okay, so 1, 2, 3, 4, 5, A, B, C, C. Okay, supported. Okay, then 1, 2, 3, and actually here you are looking at a horizontal trend here. So this horizontal trend can be more like you are still on a corrective wave here. So A, B, C. Okay, so here if let's say you are looking at A, B, C, you are here, and then you are looking at continuation. So it could be, okay, after this C, you are looking at the continuation here. But however, I see that you are not going higher than this part here. If this have to be a continuation, you should be looking at 1, 2, and then 3, and the 3, and this part here, you have to pass this, and then you have to pass that. So it is still forming because this is still uptrend. Okay, if you can see that overall, this one is still uptrend. So I still believe that this one is still uptrend. So if this were to go up, the chances are you have to pass this first. After you pass this level, what price is that level? That level is 2.98. Just now you say 1.2. Why there is a 1.2 there? Oh, the 1.2 is not okay. Titan. Yeah, 12 March. 12 March. Okay, let me see the 12th of March. 12th of March is here. So you are looking at this March here. So I'm looking at this is wave number 2. 12th of March is okay, 12th of March is here, number 4, wave number 4. And this is wave number 5. So this is wave number 4. So I'm looking at this as wave 4, and then ABC, and then C is almost on par here, and then it bounced off. So starting another count of 1, okay, 1, 2, 3, 4, 5, A, B, C. So here actually you can see an internal wave here, 1, 2, 3, 4, but this cannot. Okay, 1, 2, 3. Okay, 4, but this 4 is actually at over already, so this cannot be 4. So then you have to recount. You get what I mean? So when you are looking at here, right? So if let's say you want to count 1, 2, 3, but this 4 is too too much. Okay, so you can't do this as a waveform. So then you have to recount. So then you have to say that, okay, 1, 2, and then you have to count again. Okay, so here, maybe this is still 1, okay, and then this is wave number 2. And within the wave, 1, 2, 3, okay, or this time the 1 and 2 cannot. Okay, so here is a bit complicated here, because you cannot find the, you see 1, 2, 3, 4. This wave number 4 is overlap, so this cannot be a good count here, because 4 and 1 is overlap. But anyway, so you are looking at 1, but loosely you can count. Okay, loosely you can count. So that is why sometimes people say that you can count it loosely, because otherwise then you are stuck in a situation. So then if I were to count loosely, I can still count the 5 wave. Okay, so 1, 2, 3, 4, 5, and then correction here. But this correction is a bit deep. So that is why here we are looking at, could it be you are looking at a horizontal trend here? Okay, and if there's a horizontal trend, it means that this whole thing is a major ABC correction. So meaning 1, 2, 3, 4, 5, and then ABC, a big ABC correction trend here. And this ABC could be a flat, or it could be a triangle as well. Okay, so it definitely is a correction trend here. Okay, so let me answer some of the question. And okay, press metal. Oh, so many chart here. FKLI weekly. Okay. I just now I said that I want to show you the KLCI. Okay, because the KLCI is showing the triangle chart pattern here. So this triangle chart pattern, whereby you are looking at this triangle. Okay, this triangle. So A, B, C. Okay, so here you are looking at A, B, C, A, B, C, D, E. Okay, A, B, C, D, E. A, B, C, D, E. So once you have an E here, you are looking for a bullish breakout here. And you can see Maybank also something like that. Maybank. You also see something like that as well. So you can see this one. It's also a triangle, whereby A, B, C, D, E. And then you're going for a breakout as well. So this is a typical triangle pattern that you always see in a Busan Malaysia stock. Very typical. Okay, then okay, I try to do as many as possible. Press metal, P metal. So here we are looking at a bullish trend here. Probably I need to zoom out first. Okay, I want to see the big picture first. Okay, zoom, 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 and see. So I want to see. Okay, so here I can start from here. Here is horizontal trend. I can start from here. Okay, so I will start from here. Okay, I start from here. So if you are looking at here, at one glance, what does this tell you? So at one glance, I'm looking at, okay, if let's say this is 1, 2, 3, 4, 5, and then, okay, I'm looking at this as a wave number 1, okay? Wave number 1, and then this is 2, and then this is 3. 3 will be 1, 2, 3, 4, 5. So this is wave number 3. Okay, 1, 2, 3, 4, 5. So this is the 5th wave. So I'm looking at this as a 5th wave. Okay, so then yeah, so this one will be the 5th wave for the press tag, and it's still going up. Okay, oh, this one is press metal, and then let's say press tag. How to spell press tag? Oh, PESTEC. Okay, so let me do refresh first, because this one you need to log in. When you use the chart, you need to log in. Let me zoom out first. Zoom out, and then you want to see a big picture first. Okay. So this one, we are looking at, okay. So this is a big major wave here. I want to zoom out again and see. Okay, so this one is the top, and then you are looking at down. And then so here it will be an uptrend. Okay, so then we are looking at this downtrend. So here we are looking at here, if let's say we are, and here is actually very irregular, very irregular, because here you are looking at 1, and then 2, and then 3, and then this 3 cannot be shorter than this one. So here probably you are looking at extended wave 1, 2, but then this 4 is also, so now you are looking at correction. So most likely you are still under a correction in this ABC correction. So that means that you have 1, 2, 3, 4, 5, and then ABC. So here is a big ABC correction here. Okay, and we are still looking at very much a correction. So this correction, you can draw something like this. Okay, as it's a triangle. It's a huge triangle correction here, and A, B, C, D, E. So E, and then looking for a breakout here. Okay, waiting for a breakout. There's no guarantee, but looks like it's going to break out. So this one is Pastec. And oh, so many here. S&P 500. Okay, S&P 500. Okay, S&P 500, SPY. Okay, SPY, if you can see, right, they are, the chart itself, it's a very steep, okay, over here, and then their correction is very shallow. So every time there's a correction, it is very shallow. So this make the counting of the wave a bit challenging. And then but however, nevertheless, let's say we start from 2020 March here. Okay, so let's say we count from here: 1, 2, 3, 4. This is just a wave 4, okay, and then you could be looking at 5. So the trend is still up there. Okay, the trend is still very bullish for SPY. And B plastic, BP plastic, BP plastic, BP. Oh, okay. So this one, okay. Okay, the reason why this one is previous high is here, and I believe this one is historical high, right? Yeah, this is a historical high. So the minute you pass the historical high, then there is a gap up over here. So this gap up, it means that it is very bullish, and then the price keep in a very steep slope. But this, when you are looking at this, right, if you were to look at this wave 1, and then this is 2, and then this, you are looking at this wave number 3. Here, perhaps a better one will be Fibonacci extension that you can use. Okay, Fibonacci extension from here to here, and then you are looking at this Fibonacci extension. Maybe it has already passed at 1.618, so now it is moving towards this 2.618. And this 2.618 is around 3.4. Looks like it's going to reach this level, okay? But no guarantee, but in this case, Fibonacci extension will be better rather than the Elliott wave. Okay, then I think I have seen a lot of names here. Yeah. L'Occitane, is it? SCGM, SAM. Okay. SAM. The same thing. You need to use extension because you have passed the historical high, so you need to use the. Is this a? No, not this one. SAM chemical, right? SAM chem, right? Okay. Yeah, you have passed the historical high, so you are looking at extension here. So we will use the extension over here. Actually haven't, okay, this one you haven't passed that level and then pass this level. Okay, so you can use the extension. So you are looking at this level, past this historical high, and looking at the extension of 1.618. You're already at 1.618, and at the moment you have reached the high here, and then now you are trying to reach this high. So you still need to see the volume whether you can sustain or not, but at the moment you are trying to reach that. So what you can do is that you can't do anything yet unless you break this high. Unless you break this high, then only you can look for higher high. But at the moment you just have to observe. Okay, you can't do anything yet. Okay, SCGM. Okay, SCGM, you are looking at this, whereby and then this one is down one. Then you are looking at the uptrend here. So this uptrend, this is wave number 4. Almost there, but haven't. Okay, so if this is wave number 4, then you are looking at wave number 5 here. Okay, so but however, I look at the situation, this wave number 5 most likely is going to be truncated as well, because this one, in order to have that wave number 5, you need to pass this level. So not so easy to pass this level, because I need to look at the 20-day and the 200-day moving average as well. So the MA lines, moving average line. So I need to see where is my 20 and my 200-day. Okay, so it's actually looking at that. It's all. Okay, so now I can see a clearer picture. So you are actually at the hovering around the 200-day moving average. So that is why you are being weakened. It's very weak here. So you need to, you know, cross above this 200-day moving average, and then with a spike in the volume. So now I see as this one is rather weak. So this is a weak trend. Okay. Oh, Alibaba and Tencent. Okay, let's see. Let's see. Baba. So here I am looking at yeah, this one down. It's a downtrend. So let's see here. 1, 2, 3. So this is wave number 3. You see, you are looking at this 5 wave and then ABC, and then your C is below this wave number 4. So then you are looking at wave 1, 2, and then 3. So now you are in wave 3. So are you having a rebound? So you are looking at a small rebounds here. So after the rebounds, then you should be looking at wave number 5. And as we say, the wave number 5 can be truncated. Okay, if it didn't truncate, then it will go all the way down further. So then this is wave number 3. Okay. MMSB, okay. Or Tencent first, Tencent. So for Tencent, it is below the 200-day moving average. So, and also we are looking at, this is, okay, this one is over. And then I'm looking at 1. Okay, let's say this is 1, 2, 3, this cannot be 4. So let's zoom out first. Okay, so this one, 2. So if let's say we are looking at here, 1, 2, 3, 4, 5. So maybe we start from here. Okay, so 1, 2, 3, 4. Okay, and then 5 extended, and then A, B, C. Now the C is actually below here. So here we are looking at the beginning of a downtrend. So this downtrend will be 1, 2, 3, 4. So this is wave number 4. So you are at the wave number 4 here. Okay, so same as Alibaba. Tencent is same as Alibaba. MMSV. Okay, MMSV. Is this a venture Berhad? This one. So here we are looking at this down wave here, and then followed by, okay, let's see, 1, 2, 3, 4, 5, A, B, C. Okay, so uptrend already. So this one is uptrend. So now you are looking at uptrend. So 1, 2, 3, 4, 5. So this is the 5th wave. Okay, so how I see is that I count the wave here. So I count 5 waves down and then A, B, C. So, and then this C is actually above this. So that means this one is an uptrend already. So when this is uptrend, I have to count 1, 2, 3, 4, 5 again. So 1, 2, 3, 4, 5. Okay, so this is the 5th wave. Okay, so I will go back to my slides here. I think I have almost finished my slides, the truncated one. Yeah. Then actually I wanted to test you, what is this here? What is this wave here? This one is looking at the Bitcoin. Okay, so September 20th, what wave is this? If let's say this is ABC, okay, 1, 2, 3, 4, 5, and then ABC. Okay, so what is this wave here? This is 4 to 5. So actually, this September 20, I show you a bigger picture. Bitcoin, BTC, USD. So September, wait. Okay, maybe I zoom in here. Okay, zoom in here. So I'm looking at September here, all right? So you see that you have a 1, 2, 3, 4, 5. Okay, we have already completed 1, 2, 3, 4, 5, and then A, B, C. So actually we are looking at uptrend here. So here we are looking at, just now, what is your answer? Let's see. Where are we now? Where is the chat? Okay, the chat is, how come I can't see my chat? Where's my
Maybe
chat?
it's hidden somewhere, but if you can't see, many people are writing 3 lah.
Oh, okay.
Some
This
say
is wave
fifth.
number 3. This is wave number 3 because we are looking for 1, 2, 3, 4, 5, and then A, B, C. So we have to do the 1, 2, 3. This is supposed to be 3. Okay, we are supposed to look at 3. Okay. So actually, we have done a lot of case studies today. And the thing is that when you look at this Elliott wave, right, it looks very complicated. But however, if you to count the waves, right, you can still count the waves. Okay, it's not that difficult. And so looking at this Bitcoin, it looks like we are into the third wave. Okay, but anyway, anything can happen. So have to disclaim first. Okay, all right. So let's see any other questions here. Okay. Yeah. All right. Okay. So thank you so much, and then hope you know how to count the wave by now.
All right.
Although this is just introduction, okay? There's nothing deep. It's just introduction because there are a lot more for this one. Yeah.
Yeah, thank you so much, Pauline, for doing this wonderful session on the Elliott Wave. I think the application on charts has really given us a lot of value. So let me go to the my slide first. Okay, so yes, thank you so much, Pauline. Let me tell you our next webinar. Our next webinar is titled The Beginner's Guide to Structured Warrants. So I think many of you here, especially if you're newbies, you may not know what are structured warrants. Those stock code that ends with some dash, C something or H something. All right, so these are structured warrants. So in the next webinar, we're going to talk about structured warrants. Okay, so it's happening on the 19th of October. So this is happening from 8 to 10 o'clock. Okay, not 8:30 to 10 o'clock, because we find that this session we want to allocate more time for you. So this is going to be a 2-hour session instead of 1.5. So it's start from 8 to 10 o'clock. So we have invited a renowned issuer to come here to tell you, to share with you how you can trade structural warrants as a tactical tools to make money in the stock market. So I've given you the registration link. Let me give you again. So we have got one of the renowned issuers to come here to share with you about the beginner's guide to structured warrants. So with that, I want to thank Pauline for doing this segment on Elliott Wave, sharing with us how to use Elliott Wave to find trading opportunities. So thank you so much. Hope to see you all again, and hope we can get Pauline back again for another segment. All right.
Okay,
So see you guys.
thank you.
Bye,
Thank
everybody.
you.
Have a pleasant
Bye-bye.
rest of the day.